Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility.
Okay, so before we actually start the refinement portion of the demand zone or SND zones portion or part, whatever you want to call it, there's actually one more type of demand zone that you need to all be aware of, okay? And you're going to see very quickly that all of these overlap with each other and can and will overlap with each other because it's a concept. You can utilize specific ones of them to create trade plans and to trade off of them and to make a system out of that. That's perfectly fine. That might be your calling. That might be something you're going to do. And I'll show you examples of what you can do with that just in relation to this alone. But you need to understand every single type of demand zone because it's going to help with further and future refinement, understanding of where to look, what to look for, if a market actually makes sense to follow, because that's all going to be part of it. So the last type of demand zone, as crazy as this is going to sound, okay, is very simply a candle of any color, however it wants to look, simply with the high, once again, getting traded through. That in itself, regardless of the color of the candle, okay, so just imagine there was like a, whoops. You can just imagine there was like a down candle before this. Regardless of the candle color, up or down, bullish or bearish, trade above it, or the closure, same thing as we discussed thus far, is also indicative of a valid demand zone. From that high to that low. With the same understanding, okay, that no matter where this selling and all this stuff is occurring, that theory is occurring here too. Whatever's happening in here, there was selling that had taken place during this whole thing to allow themselves to rebuy into the market and then to take off and basically create that inefficiency once again. And what's interesting is you might already notice that it actually lines up with one of the things we discussed earlier, right? So it almost looks like this one, where now you've basically just learned that this right here itself is also its own valid demand zone. As this candle traded up, not only did it validate this demand zone here, okay, it also validated this demand zone here. Again, showing the fact that these can be stacked. There can be 1, 2, 3, all present at once, okay? Because this in itself right here was also a demand zone. Both are, okay? Let's go back for a second. Let's jump down. There we are. So you can notice that again, if this candle continued going higher and closed maybe above this high, that would also make a demand zone here, just like we just looked at in the above example, okay? But the final portion of understanding all this is that this in itself, any color candle of any sort, anywhere, with the high that trades through it. Now this is, again, this version is a version of this as well as the initial version we taught right here. And the reason we didn't start with it initially is because it would just been very confusing and no one would know what the fuck's going on. And maybe you're still in the position where nothing makes any sense yet, which is fine because, we're just starting out and you're going to do a lot of practice and you're going to show up to webinars. And you're going to get better and better at this. You're going to see it done live and you're going to see it done over and over again. You're going to see it done in the course. You're going to see it jumbled with other things. You're going to learn a shit ton, okay? But yes, any colored candle followed by that break that actually closes with a candle body is valid. And similarly, again, if you take any candle whatsoever, any candle, and then follow it normally, and it starts doing the thing where it plays around and has a wick, then again, the wick will be updated. And this can be an up candle, okay? So the only reason we started initially with just the down candle is to understand this theory right here. But now that you understand that, and you understand that this happens across every time frame everywhere, a lot of you might start to see, even though it might be a little hard right now, that when price plays around inside of here, back and forth, and is even coming from an up candle in this situation, this initial high to whatever low exists is still the selling that was undergoing before, right? There's that pause now. And then when it fails to go and it sells again, the same thing's happening. So now when you have this demand zone, It's the same thing, okay? So any color is actually fine as a demand zone, okay? So that's the fifth type, whatever you want to call it, of demand. And again, all of them can exist on their own at the same time. Some are considered part of the same one. Some will be happening at the same time. Some will happen on the same break, etc., etc., etc. That's just one understanding, okay? So let me show you some examples of these now, because now it's going to make it a lot easier, okay? Here we go. Look at this, for instance. This high being broken with a body validates this demand zone, and that now acts as, let's just call this one type 5 right now. So we have basically 4 types. This is really the only type you'll ever have. 1 is that, 2 is that, 3 is basically that or more, right? So really 2 and 3 are the same. 4 is updated highs over and over again, and 5 is any one candle that has this done to it. So what you'll notice is this acts as a number 5, right? As a type 5 demand, whatever you want to call it, but it's just a simple demand zone. And at the same time, notice there was a down candle here. If we draw that high, this one failed to break it, and then this one broke it. Well, as you can see now, it also acts as a type 4. Right? Because for it, we had to update this high because it failed to hold it through, which means there was selling coming in, doing the same back and forth bullshit inside of there before this break and close above, thereby making that a valid demand zone that basically is a 4 and 5. Now, again, you're going to find different probabilities and different contexts and different power levels basically associated with the type of confirms and how many confluences a certain zone had. And again, from there, remember, we don't need to look for the mitigation. Now, here's the mitigation starts going, then fails down. That doesn't matter. This is all part of the future of what we're going to learn. I just want you guys to all remember, okay? At the same time, remember, if you were trading a lower time frame, like a 1 minute, at this point, when this validates a demand zone, what do you know you can do? You can now seek longs or a return and then longs, which means that on a lower time frame, what do you think is going to happen inside of these areas here? Type 1 through 5 demand zones, guaranteed. So it's guaranteed to happen because that's how markets move, okay? So price goes, right? Now you can do the same thing. As price goes, starts making a pullback, and then once again, you have a down candle, and then it breaks. This is that type 3. Sorry, that's that type 2. And again, type 2 and type 3 are like the same, right? They're really just prices going sideways inside, and then breaking up. They're the same thing, really. Okay, so really you only have a type 1, a type 2, a type 4, and a type 5. So just remember that. But in this scenario, because of what I taught thus far, right, this right here, as it breaks and closes above, from there to the lowest low, that in itself is a demand zone formulated by a type 3. Yeah, a type 3 demand zone there. At the same time, though, what do you have? You have this candle, standalone candle, broke above, from high to low, draw it out. That in itself right there is a type 5, right? So now you're seeing some overlap, but you have a double demand zone creation. At the same time, you might be someone that, as you remember from previous ones that I taught, you have a down move here, you draw it across, and then this breaks it. Now this right here is, again, a type 3. Okay, on its own, but now you would take it from the top to the low, and this is a type 3 now. So you can see that they can all be stacking, all happening at the same time, all over the place, continuously, right? But from there, the fact that this candle on its own, okay, in this scenario, validated the demand zone of 3 zones, basically, that might be something that shows you a lot of probability, and because it's happening after what's happened just now, after a higher time frame has shown a validity in demand, you might see that as a very bullish action and very simply enter the long, stop under, again, where this demand zone, or this demand zone based on your personal risk preference. Some of you might put it under this one because there's 2 here and you're happy with that. And you can look to take that long, and there goes the expansion. And then from there, right, because you know that's happened, well, you know that new demand zones are likely to happen too. So maybe some of you, for your trade plans, just with a demand zone approach without anything else yet, right? And again, this would just be flipped for supply, and we'll show some examples in like a final video, just recapping everything, but flipped, okay? Some of you might wait for this clarity in demand zones to come in, right? Demand zone comes in here, demand zone comes in here, demand zone comes in here. And now you might say something like, because we've had so many demand zones come in this case, a type 5, a type 3, a type 1, all of them came in. Now I'm going to wait for a type 1 demand zone to enter. And you might wait, wait, and you get this down move, and notice what happens. Price trades up and closes. That's created a type 1 demand zone. So what does that mean? That means price should expand, or it should mitigate then expand. And again, that could be your own trade plan. And notice how already, with just a tiny bit of this course learned, tiny bit, you don't even know anything. You haven't even scratched the surface. This is the tippy top, okay? But just with that, you already have a way to define a trade plan. Your trade plan already on its own, now I'm not saying this one would be profitable, but it's showing you how powerful the concepts are, could be something as simple as wait for 15-minute demand zone that overlaps with 2 or more, or you might say it needs to be a 4 or a 5 type demand zone, right? Right here. It needs to be a 4 and a 5 together. Okay, so you wait for that. That could be your first rule. Then secondly, you can say on a 1 minute now, wait for 3 demand zones to occur on top of on like just after each other, but that's something that you can test as well, right? So you wait for 3 demand zones to occur on top of each other. That's exactly what happened here. You had a demand zone, another demand zone, and another demand zone, all formed basically by the same candle, thereby showing you potentially the validity of a much more bullish price action. And then from there, you can simply say either on continuation, because that's the expectation, or on a mitigation, right, where price comes back, and then for the expectation of it now to go up, enter on a type 1, and in this case, only a type 1 valid demand zone, okay? And then target, stop loss under the demand zone or further under based on your assessment, and then target 1 to 3 RR. So 1 to 3 risk to reward. That could be a trade plan. I'm just showing you firsthand. Now, again, that's not my trade plan. I don't advise trading this trade plan unless you've tested it, in which case, go for it. This is just an example of a trade plan that you can already create out of the concepts that you are learning right now, because you're already understanding what is actually tuning the markets to move, okay? You're now finally understanding what true trend looks like, right? Because when one of these occur, what's really happening is you're just looking at the momentum of the underlying money that's moving into the market, which means that as long as you're doing a few things correct, following a few simple rules, and maybe confirming a few things, well, you're with the money. Right? And every time you're entering in the direction that's already delivering, not off of a random back move and all this stuff. You're looking for the specific direction you're looking for a specific entry in the direction of the market, right? So this is already an example of a trade plan that you can already make with something as simple as what's been taught thus far, without any further refinement or anything like that taught, where you basically take a higher time frame, wait for a demand zone, right? Because let's say you know that the market's going to be bullish, and you're going to learn about how to do that in a second as well. Well, as you work through the course, of course. And then on a lower time frame, in this case, a 1 minute, you go ahead and you wait for a 3 demand zone validation, showing you basically that money is clearly coming in. And then you look to enter off of the first type 1. And then as you enter, you look for a 1 to 3, or let's say a 1 to 5, right? Which means by risk understanding, and we're going to talk about risk later as well, hopefully. Well, no shit, we will, but I don't know if I'll put it before this video, because as I teach, I remember things that I want to teach further. But of course, with a 1 to 3, if you had a 33% win rate, 35% win rate, you're going to make money. If it's a 1 to 5 or 1 to 10, you can get away with having a 20% win rate, a sub 20% win rate. So that means under 20% win rate, and still make a shit ton of money. I'm just going to remind you very quickly right now, and you're going to learn about this in the webinars. Most of the most profitable traders, millionaires, all this fun stuff have usually systems that are around the win rate of 10 to 40%. But mainly the ones I've studied, 20% or under, 30% or under. So remember, win rate, if you've learned about win rate, it's complete nonsense. Forget all that bullshit. And I think you learned that in the wiring section and the initial introduction. But very quickly, I want to show you how to use something as simple as what I've taught thus far, which is being demand zones and how to think about them, to already create a beautiful system that can work for you, right? This is an example of that. And you can have a further rule where you say something like, and then you can continue entering new ones if they show up as well, right? So maybe some of you might be like, okay, I've had my 3, now I can enter any type 1. That's a type 1, you can enter it. But then look what happens, right? No, actually there's no more type 1s. Okay, this is the only other type 1 that occurs, which is right here. So of course some of you might see this as a trade and look to enter it off of the fact that this is a demand zone here, right? Or you take it off of the limit, just like that, right? But again, I wouldn't do that. because we haven't tested those rules, but that is also, for instance, a type 1 demand, right? Let's look for another example of like this trade plan that we just wrote out for fun, just to showcase how you can make use of something like this, okay? So again, we'll just go from here. I don't know what's going to happen, but let's just go from here, and we're going to look for a 1 to 3 trade just for fun, okay? Or 1 to 5. I don't really care because, again, we don't know what's going to happen. I'm not here just to like make money, just show you how amazing it is. Just showing you how to utilize the concept using what I've taught you so far. So again, you have a down candle right here, okay? And what happens? Price doesn't do anything on this candle and then trades above and closes, okay? Now, what does that make it? That means from this high to this low, you have a what? Basically a type 3? A type 3 or a type 2. They're almost the same thing, right? But so you can write it as you wish. A type 3 or a type 2. So because 2 and 3 are like the same thing. So we're not going to do both of them. 3. And at the same time, what did I just teach you? Any candle on its own can also create a demand zone. So this high alone to this low, right? When this breaks and closes above, it also creates a demand zone right here. There it is, okay? So you have 2 met ones, the 3 and the 5. Okay, which means that now, due to our given current criteria, we are free to look for potential longs, right? So on a 1 minute, what do we know? We are waiting for at least 3 demand zones to occur basically on top of each other. So let's see if we can find something like that, okay? So very simply, we're just gonna wait now for some kind of up move. So let's wait for that, okay? So we have an up move. Now let's determine if at least 3 demand zones occurred on top of each other, because that's what we're looking for our current rule, right? Now we have type 5 right here, clearly, right? That's this type 5 one right here, where it's just any candle gets that trade above, that makes this a demand zone. That's 1, okay? At the same time, we have a down candle with a high. This does it, and that makes it a type 3 or 2. Okay, so we have a type 3 or 2, and that's this one right here. But do we have another? We actually do. Now, this is going to get a little crazy, but we have a third one. I'm going to show you where that is. So you see this high? This high of this actual up candle right here, right? What did I just teach you? That's very important. Type 5 is the fact that you can start any, okay, demand zone with any high. So that means that this high itself can start a demand zone if it does the things that we're looking for. But instead of that, what does it do? Oops, sorry. What does it do? The next candle wicks it and doesn't make a close above. So that means that it updates to this high, right? And then from there, it breaks and it closes, which means that's a type 4. So what we've had here is we've had a type 5, okay, a type 3, and now we've had the same zone. You can see they both line up because it's the same one, because it's the same high, a type 4. So theoretically, you have 3 met. Now, you might make a rule where you say, I don't want one of the 3 to be something like this, because to me, I don't like that, right? That's fine. This is part of the trading process. You're going to determine those things for you. You're going to do a ton of testing. I'm going to teach you how to do all that too. So if that is 3 met for you, well, then theoretically, you're fine. Now you have the option, because you have rules, right, to either enter on the candle because the demand zone's valid, which means it should expand, or on the mitigation of this to then expand, or on the mitigation of this, right, which is also a demand zone, throw your stop under to then expand. Now, personally, we're just going to do it off of there because that's how we did the last one. Stop goes under the low, just a little bit under, just like that. And we're going to simply look, like we said here, for a 1 to 3. And that's our entire system. Nothing more. Nothing more to do. We've determined that the demand zone of the higher time frame has been validated, which means what? It wants to go bullish. And now we're going to our lower time frame. We've proven that it's given us 3 demand zones on the same candle, which means that we have a valid demand zone, or a validated demand zone, which can mitigate, or what is more likely, an expansion. So we'll wait for that. Right, and then you might have rules for breaking even, whatever it might be. Now, again, I swear this wasn't like pre-recorded, or like, again, when I'm taking this, I'm not looking for it to win or to prove anything, because all I'm trying to do is show you the concept at the moment. But this is what you're going to find happens as you start to experiment and understand how these zones are created, why they're created, and what they're doing. The reason this worked out here, whatever it might be, is 1, because it could just be fully lucky, but 2, because we're utilizing concepts that now make sense in what we call a momentum following or trend following direction. We had something on a higher time frame, right? That did what? That proved to us that we had some kind of demand zone or demand coming into the market, right? Money came in, money was selling, and money has come in through the validation of a demand zone. And that was a validation of 2 demand zones at once. And then we had the next step that we were looking for, which was what? Well, we were looking for price to make at least 3 demand zones on top of each other, utilizing any 3 together of these, except for 2 and 3 put together. We don't count 2 and 3 because they are the same thing, right? 2 and 3 are basically the same thing, but theoretically you can only have 2 without having 3, and you can only have 3 without having 2 if you're looking at the specifics, right? Because 2 would be 3 candles, right? A 3 candle setup or whatever. Okay, so we've gotten through all that, and now I'm showing you firsthand how if you just followed a trade plan using just the first step of this course, okay, which in this case is supply and demand, if you just made a system out of that, you could still, of course, just like with anything, find profitability. Again, you'd have to do a lot of testing, but that is how you could utilize just these things together, okay? And that's it. And then maybe if you targeted 1 to 5, you might have not made money, right? We'll see what happens, but if you targeted 1 to 5, theoretically, you might not make money. Right now, targeting 1 to 3, it worked out for us. And then you can see targeting 1 to 5 would not work out for you. And maybe you'd be stopped out of break even because you'd move your stop loss up to break even. You can see once price took off, it never came back to this point until it hit 1 to 3. So that's also something important to take note of in the future, right? If you're building out a trade plan, which I'm going to teach you how to do, I'm going to teach you how to get all the data, all the stuff. It's going to be easy, okay? It's going to be easy. It's a lot of work watching all this, but it's going to be easy. Just trust me. And in this case, it just ran and gave you that 1 to 3. Now, again, I made this up on the fly, 100%. But the reason I understood that there's going to be some kind of semblance and understanding behind it, or some ability to actually take something out of it, is because I'm putting together the concepts that are being taught to you right now, and I'm throwing them together through actual confluence, okay? So these are demand zones, okay? That is how they work. And this is just using demand zones without any further refinement, without anything, just understanding how the 5 types basically of demand zones form, okay? Why they form, how they interact, why they don't have to be mitigated, or why they don't have to be traded back into as it's not necessary, and what story they're actually telling you. And then how to understand that because you're going to see continuation, you don't have to see that retracement back, which is why even here on our trade plan, we're looking for a demand zone and then looking to follow, because the odds are prices want to continue moving in that given direction, right? Okay, fantastic. So we've learned a lot. We've learned how to look at demand zones, find them, look at examples of them. And now we're just going to look at a few more examples of demand zones, and then we're going to go to supply zones. We're just going to get used to this, okay? And again, notice how we're on a 1-minute chart. We can do this on 3 hour. We can do it on a weekly chart. All the time frames are the same. It doesn't matter what time frame we're on, okay? What do you see here? Let me ask you again. It's going to be crazy, guys. You guys are not going to, you're never going to believe it, okay? You have a down candle. Put the high in. Price trades above instantly. That's a type 1 demand zone right here. That was a type 1 demand zone. On that candle, it became a type 1 demand zone. What do we expect from that moment? Prices are going to expand or are going to mitigate inside of this demand zone from this high to this low and then expand. What does price do? Mitigates and then expands. And what does it do as it does that? It makes another down move. Okay, let's draw that out. Did this validate a demand zone? No. Okay, let's draw out the next high. Did this validate a demand zone? Yes, right? It validated this demand zone right here. But at the same time, remember, this is a type 1 or a type 5, however you want to look at it, type 1 or a type 5. It validated this demand zone too, right? So at that point, you validated 2 demand zones with this 1 candle, and that might be something that's important to you, all right? Very, very easy. And then from there, you expect expansion, right? Or mitigation, then expansion. You get a start to expansion, a mitigation, then expansion. Now, again, we're on a weekly chart. If I asked you right now, just based on what you know, during this time when this validates, do you think you could go inside of a 1 hour, a 4 hour, or a daily, for instance, and follow new demand zones that are probably going to be available to you inside of here? A lot of you should be able to understand the answer is yes, and that is already in itself a trade plan. Some of you might be trading a much higher time frame. This is an example and showing you firsthand that what I teach is not limited to any one time frame. Most mentorships, most things that you're going to learn are limited to one time frame and usually a specific time frame because of the nature of the things that they're teaching. The things that are teaching here are what are true trend following systems, are true momentum following systems, which means that when they occur, wherever they occur, they are showing you a specific footprint of that given time frame, of the given money behind that time frame, which means that you can actually build a system around any specific time frame that works for you, which is why you have actual true autonomy when you're here at Mentfx. So congratulations on being here. Well, no shit. Okay. Again, find any down move, Look what happens. There's a down move, and what does price do? Price goes, fails to go, and again creates a high. That could be a high that you use down the line. Look what happens. Price breaks it here, and theoretically you could draw this as a zone to the lowest point and draw that out. That's a validation of a demand zone, of course, right? Now again, you could go inside of it further, right? And you might see this down move gets updated to this one, and this candle itself validated a demand zone inside from this high to this low before the validation of this one, okay? And you can see how these demand zones interact with each other as they get built up, right? And if your underlying assessment of a market is that it's overall bullish, which, by the way, I'm going to give you a little bit of a sauce right now, but you're going to have access and know exactly how to use this all. And it's going to probably look different by the time you're watching this video down the line in the future. But Mentfx Sentiment, which is available to you as a mentee here, as a person with this community, right? You'll notice that UJ for the longest time ever now has remained extremely bullish on the daily. This has been true forever. This has actually been true during these times here too. I remember, okay? Because we traded these times here with the team and expected this move here. And this is how trends start. This is how trends form, okay? So these are creating those demand zones, which means that your expectancy is that you're going to expand or mitigate then expand, right? And you can see there's a number 5. Here we are, a number 5 zone right here as well. This high breaks and expands, and that's also a demand zone. Notice how actually none of the demand zones that we drew here got mitigated. None of them had price trade back into them, right? This candle validated, then look, no candle traded back into this one. Okay, when this one got validated, no candle traded back into this one. When this one got validated, no candle traded back into this one. Notice that. Notice how that doesn't change our analysis. Notice how that actually propels our analysis because we understand what's happening. There's a footprint that's being met here, okay? Very important. Just on the weekly now, right? It's the same thing though. I hope a lot of you are seeing this, right? You have some down candles, draw in the down candle, okay? What happens? Builds higher. We draw in the new high. It breaks. Where's the high to the lowest low? That's our supply and demand zone. Look what happens. Price was going to do what? It's either going to expand or it's going to mitigate and expand. It's likely going to expand, but it can mitigate and expand. Look what it does. It mitigates and expands. How does it mitigate and expand? What does it create? A new type 1 demand. Down candle, type 1 demand. What does it do? Does it expand? Yes. Does it first mitigate then expand? Yes. Then what does it do? Before it does that, makes a new type 1 demand. Validates the type 1 demand zone. Here it is from the high to the low. What do we expect? For price to expand. What can it do? It can mitigate and expand. What does it do? It expands. And again, if you understand that this is what trending environments truly look like, well, notice how easy it's going to become for you over some time, of course, because you're still learning. But imagine how easy it's going to be for you to understand true direction of the underlying market and where the market is likely to head. Okay? Down candle, trades up, closes beyond. It's a validation of a demand zone. What do you expect? The demand zone should now be, we should see expansion, okay? Or we can see mitigation then expansion. Expansion. What do you see next? You have a candle, a down candle. Take the high. Type 1, demand zone. What should it do? It should expand or mitigate then expand. It expands. This is money available to you on daily charts, 3-day charts, 4-hour charts, 1-hour charts, right? Now, again, should you be trading like on a 1 minute here? I'm going to teach you all about this too, but no, right? Because on a 1 minute, there's too much back and forth now. So you're not going to find some consistency because, again, there's going to be way too much back and forth, back and forth, back and forth, back and forth, back and forth. So you want to see something that's more aligned with the time frame you're on, right? And we're going to talk about that down the line as well, of course. But you're going to learn over time that time frames don't matter. And this is one of the reasons that time frames don't matter, because it's just understanding that it's just orders in the market, and this is how we're viewing the orders, right? So again, that's a type 1 demand, and we expect it to go, and it goes, right? But at the same time, is it another kind of demand? Well, take a look at type 5. If we use this high, and then it gets updated to this high, so this is also a type 4 demand, right? So this one alone is a type 5 and a type 4 together. Very cool, right? You can do this with anything. You can do this with any down move now, right? But notice how prices build, and inside of them, you're going to have the same demand zones. So hopefully demand zones make sense to you now, okay? And you're going to have the same thing on the sell side. But again, like even right now on UJ, right? Notice what happens. We've been overall bullish. The sentiment viewer, which again, you don't have to know about right now, but it's on mentfx.com/sentiment. You should be able to find it. It's very, very simple. The daily institutional bias has been very, very bullish. So what should we be looking for theoretically? Well, given the fact that the higher time frame money is showing bullishness, we should be waiting for demand zones to get involved, right? So on the weekly, look what we have, a down move. Okay, let's draw that down move in. Prices come, wick above it. I'm going to show you that right now. Here they are wicking above it. So we draw in the next high, breaks and makes a demand zone. Where's the demand zone? From the high to the low, draw it out. You cannot make up these zones. Prices are going to do what? They can expand or they can mitigate then expand. They mitigate then expand. What can you do on these time frames here, on lower time frames? You can follow them for trades. Alternatively, you could wait for, again, on the same time frame, a new demand zone to be formed. Here's a high, draw it out. It makes the wick, so we draw out the new high. It makes a wick, we draw out the new high. What does it do next? It breaks and closes above. So where's our demand zone? From here to here. What should price do from that point forward? It should expand or it should mitigate then expand. It mitigates, then it expands. And that's where we are right now. This is live price at the moment. And what's the likelihood? That price is going to continue to do what? Expand. Okay, why as well? Well, look at the most recent down candle we had. Draw it out. What did it do here? It validated this demand. What did it also do? It validated this number 5 type demand right here. So you have this demand as well. So what's price likely to do? On this candle alone, when it was like this, price is going to expand or it's going to mitigate then expand. What did it do? It mitigated, right? You can see price opened down into the zone. So it actually mitigated the zone and then expanded. And now we can expect it to do what? Expand. Oh wait, this is not live price. I'm sorry. I forgot we were in replay mode. Okay. Well, even better for teaching. What happens? Price expands. Then what does it do? Starts mitigating that zone. What can you wait for? The same things we've been talking about. Here's a down move. You can draw in this high, right? There's another one here. Notice what they both do. They both get updated to this high. So there's 2 type 4s inside of this price action alone. If anything, even 3, because you could use this high here as well, right? As the initial type 5 that becomes another type 4. And you can use this high as well, which is its own type 5. So this candle alone, right here, as it validates that demand, is validating like 3 different demand types, right? It's validating a type 5, this last candle here. It's validating a type 4. Oh yeah, that's all it's doing, a type 5 and a type 4. It's doing multiple 5s and multiple 4s, but it's just doing a type 5 and type 4. So again, from this high to this low is its own demand zone. And from this high to this low is its own demand zone. What should price do? Price should expand or mitigate and expand. We have a down candle now. There's price ending in 21 hours. What do you think happens if price ends above this? It creates a new demand zone. In that case, what do we expect? Continuous expansion on UJ to the top side, on the weekly at least. Otherwise, if it ends here, there's nothing for us to touch. We can continue expecting bullishness, but we need to be aware of the fact that this was not mitigated and there's no new demand zone to work with right now, so we'll just be working with maybe a lower time frame. And again, what do we know is going to be true about the lower time frame here? About the demand zones? Well, you're going to get demand zones that are going to set up to go long. Sometimes they're going to fail. Look at this one. This one failed, but it's still a demand zone, right? Down candle, trades up, makes a type 1 demand zone. But again, in this scenario, this is actually going to be valid down the line. You're going to learn why. This is called the concept of absorption. That's fine. We're going to talk about that later. Don't worry about that right now. But in this scenario, breaks, and then it does expand, but not for the purposes we want to see. So the most important one is this one here, actually. Okay, you have a down candle, draw it out. Updates to the high because it doesn't break the high. That's type 4 now. Breaks the high, creates a demand zone. What do we expect at that point? Price is going to expand. Price expands. What can it do, right? It should continue expanding or mitigate then expand. Fantastic. You're starting to learn, right? I hope. So again, notice how this is all happening across all time frames. Now, the reason I'm doing it on UJ is because I've just been trading UJ a lot. And in this scenario, it's easy to look at the demand zones because it's been in a bullish bias, which is what we look for, right? Which is exactly what we look for. You have the same thing here. Take a look. This is actually stuff that we traded ourselves. So you're going to, as you work through the webinars, which is also huge time, what do I call it? Recommended by me that you work through all the webinars, you're going to see when price was, before it ever started anything, when price was like here, we were talking about these bullish zones to deliver price bullish. You're going to learn all about that. But very simply, once again, you had a down candle, right? This one, or this one. You could use either, right? Notice how they both line up. So this down candle became updated to this high, which became updated to that high, which is a type 4. And then this down candle just got traded through as a type 2, right? There it is. And then this candle itself right here was also traded through, making it a type 5. So this push alone, okay, created a type 4, a type 2, and a type 5, right? 3 zones. And what did we talk about like a second ago? We said there's a trade plan that we can use with 3 zones. What can we do from there? Well, there it is. You have a demand zone from this high to this low, right? Or from this high to that low. And we can expect what? Expansion or mitigation and expansion. It mitigates and expands, and it mitigates further. And as it mitigates further, what does it do? Down move, breaks it, creates a new demand zone. We should expect bullishness. At that same time, makes a type 5 demand zone. Expect bullishness. Price delivers bullish without ever mitigating a zone. Zones do not have to be mitigated. They do not have to be touched. It's not necessary because of the beautiful, beautiful things we discussed prior. And right here, the star rule, where if there's more lots and buys for the composite operator than there are in sells, and they don't need to mitigate any more sells in this scenario, well, then there's no reason to do anything other than deliver. And we ride those coattails because we understand how to actually spot footprints instead of forcing price to go the opposite way. Okay? Beautiful. And again, you're going to see firsthand how we used all these zones over and over and over again, right? So here you are, type 5, right? Validates with this candle, type 5. The down candle itself, type 3. Sorry, type 2. Well, same thing, right? But type 2, right? Here it is. Delete that. Trades above. This is also a demand zone right here. Beautiful. This validated 2 demand zones. You expect at that point for price to expand or mitigate then expand. It expands. If you're trading a lower base time frame, you know during this point right here, at exactly that moment, following this market to the long side makes the most sense, especially when you partner it with other tools that are going to be taught to you. Now we're still only on the first portion of the tools that are taught to you. We haven't even touched we haven't touched anything yet. Okay, really. This is one of the tools that you're going to use. Given that it's been telling you bullish, what are you going to do now? And this happens. Now on a lower time frame, let's say you're an hour-based trader, you can follow longs using demand zones. So you might wait for a correction or a down move, wait for it to expand. There's a down move, some down moves. You're waiting now, right? This down move is now becoming a potential what? Type 4, right? Where the high gets updated. So we wait. The high gets updated. So we wait. Nothing happens. Nothing. Some more down candles so we can interact with these new down candles. What does price do? Here's a down candle. Here it validates it. That's a type 2 demand zone. At the same time, it's a type 5. Broke both of them. That's created a demand zone now. Right here, it's also created one from this high to this low. Right, both of them. You can see they're kind of stacked. You have a choice. You can watch for that trade, or if you're ready and you're happy with it, here's your trade. You enter it as is, close that candle because it's now validated 2 demand zones in this scenario, and it's now within the realm of what you were expecting, and that could be your trade. And it might be 1 to 3, 1 to 5, 1 to 10, 1 to 20. I don't know what your specific actual RRs are going to be. I'm going to teach you how to figure out management for yourself, but these are trades that you would record for yourself, right? And you would follow them, right? This is just using that same concept. This is using nothing more than the concepts of, and again, all the stuff you see on here, you're going to learn about, don't worry. But this is using nothing more than the concepts of demand zones and what they're actually functioning as. The validity of them is actually showing you a huge footprint about what the market is telling you, okay? It's a huge footprint. And if you understand that, then you can take advantage of it in this exact way, because now you're actually becoming a trend follower. You're getting behind the money as it's showing you where the money is going rather than forcing anything random, like looking left and trying to force anything random, okay? This is what it looks like. This is phenomenal. And again, notice how that delivers. That's that trade for you, right? And this thing is still going. Now it's live price, okay? And that's all based on the fact that we waited. A demand zone came back into validity, right? And then we started following it near the beginning. Now you may have rules down the line that you'll learn about where you'll say, as the move starts to go, I'm going to wait until a new demand zone comes in, right? And then simply, as this demand zone came in, right, like I just spoke about, right here on this candle. So this candle validated demand zone, right? It validated this, in this case, because it updated the high, type 4 demand zone. And at that point, you have this demand zone. What can price do? It can expand or it can mitigate and expand. Is everything in agreement at the moment based on what you know? Yes, all you know is that daily is bullish or an institutional bias is bullish based on the Mentfx stuff, and that demand zones have been delivering bullish, and the weekly, right, is in a demand zone that's delivering bullish. The daily just created a new demand zone, which means that you might have some form of expansion now because it's in the early stages of a demand zone validation, which is also something you're going to learn about. Early stage, late stage demand zone validation, right? Because that's going to determine whether or not you should continue looking for a trade. Now, let's say the 1 hour is your time frame of entry. Well, what are you waiting for now? Simply a demand zone, right? A validity of a demand zone that makes sense for you, maybe for your rules. So you might wait now. Okay, look what we have. We have a down candle. Type 1, demand zone created from the high to the low. What can price do? It can mitigate and then go, or what's likely, it can expand. If this was your confirmation, that could be your entry, your stop under the low, and you could look for the expansion long now. Now, what's true about this? If we were using our trade plan that we've written out a second ago, where we're looking for at least 3 demand validations, this wouldn't meet it. So you might have not taken this, right? But right now, all I'm showing is this is demand validation with an overall assumption about higher time from demand validation, which means that it could be a valid trade. And lo and behold, once again, you have delivery. Okay, again, none of this is scripted, none of this is pre-cursed. You can see that I'm literally sitting here like writing this out as we go, because I'm not here to pre-script shit. I don't really care, because I just care about you learning. But what I do want to show you is what it truly means to follow momentum and to follow trend. This is how you do that, and this is just starting again with the initial steps of supply and demand. Nothing more. This is just showing you supply and demand right now. And you can already see how powerful the concept in itself is if you just partner it with a few timeframes and maybe with a sentiment viewer. Okay? To the next video.